What's going on, everybody? Spencer from Great Capital, and today we're talking about finding deals, specifically multifamily acquisitions. Wherever you are, whatever kind of deals you're looking for, there's just some commonalities that you have to understand and you have to work on. And just keep in mind, this isn't a short process. If you decide one day you want to purchase or invest in a multifamily property, it can take a while for you to build a track record, build a rapport with sellers and brokers for you to really be taken seriously to take that project down. So that's what we're going to talk about today. What are the steps and what you need to do to acquire a multifamily asset? When you're looking at investing or buying a multifamily property, the first thing is you have to establish what you're looking for and really laying out a specific set of criteria. So when you have these conversations with brokers and owners, you know exactly what you're looking for and you're not nebulous and just talking about any kind of deal. If you're specific of what you're pursuing, you're going to be taken seriously. So first, let's look at the criteria of what market. Are you going to be pursuing assets in your local market, or are you going to be going and searching for other, maybe faster growing markets that produce cash flow or are more favorable for investment? So step one is really pin down which markets you're going to target. And we're not going to get into what to look for in a specific market because we've done that in other videos. Check those out. But really dial down what's your one market or maybe several markets that you want to actively pursue and put your time and energy into. The second is really what kind of asset class, what class of property. Are you going to be targeting luxury assets? You're going to be targeting more workforce housing, somewhere in the middle of the road, more value add acquisitions or more stabilized acquisitions. Or maybe you're interested in distressed opportunities, taking something that's really broken and fixing it. You really need to pick one strategy in kind of one general asset class that you're going to pursue. So when you have these conversations, you can tell a broker or a seller exactly what you're looking for. And the third is your specific deal size and that specific deal criteria. If you're looking for 50 unit properties that may be, say $3 to $5 million, you want to understand kind of what your target purchase price is, whether that's $3, $5 million, 15, 20, whatever that purchase price range is. You want to have a good idea because you don't want anyone to waste time working, finding a project for you, or for you to spend your time looking at a project if it just doesn't fall in that criteria. Also, unit count, location, get some very specific deal level property criteria established. So when you have a conversation, you have a very specific list of this is what I'm looking for. And you can have a range, but the more specific you are, the more seriously you'll be taken when you have these conversations. Like any business, real estate is a relationship business. And when you're pursuing opportunities, the relationships with these brokers and these off-market sellers, property owners, they're the lifeblood of your future for real estate investing. So establishing a rapport with these brokers, with these owners is absolutely critical. And so even if you don't have a property that matches your exact criteria, checking in with these brokers on a very consistent basis to see what's going on, what's happening in the market, what's being listed, what's coming to market, go into more detail about what you're looking for. You always want to be in the top of mind to these brokers because eventually, once you've established a track record, you're a known quantity, they'll start bringing you deals that haven't hit the market, that they're not going to show to anyone else, or they'll show it to a very select group of clients because they know what their criteria is. We get calls like this all the time from brokers saying, hey, we've got a project. It may be coming to market in the next 2 months, but it fits right into your criteria. I think it would be perfect for you. Would you like to take a look at it and maybe make an offer preemptively so it never goes to market and it doesn't get bid up? We had a couple of opportunities like that. Actually in the past couple weeks, ended up not being a great deal, but it was a great opportunity to at least look at and to get that kind of information flow. And this only happens if you've established a relationship, some really good rapport with the broker. The second piece, and this is going to really help build that rapport, is your track record. If you're a known buyer who does what they say and they can close consistently, you're going to go to the top of the list for brokers. Now, if you don't have a track record of buying multifamily assets, you're going to need to leverage whatever kind of track record you may have, and you might have to get a little bit creative with it. And so, if you're investing in other types of real estate, absolutely highlight that. And maybe not say, I've only done single family rentals, but say, I've been investing in real estate for so long. We've had a lot of success. We've done so many properties. Make yourself look, and feel bigger than maybe you are. Or maybe you've got a track record in business or some industry that shows that you have the capabilities and you're a serious person. Because what brokers and owners don't want to do, they don't want to waste time. But if you can show that you're a serious person, you know what you're talking about, you know what you're looking for, you're at least going to get that foot in the door and have the conversation and be considered even if you're not a known buyer. So again, establish your track record, build your track record, and maybe it means partnering with someone who has an established track record so you can get that foot in the door. But either way, you have to focus on how you're going to present yourself to brokers and owners and use the language of multifamily investors, know the jargon, know what the terms are, and so you can ask the right questions. And again, you sound like a serious buyer. One of the biggest things about just establishing and maintaining these relationships is just being consistent, checking in. If you're targeting off-market opportunities from owners, you're probably going to get a no or maybe no response the first 1 to 2 or 3 times you contact them. So I would check in with them, every quarter, send them an email, give them a call, maybe even send them a letter, maybe even send them a gift or something. Say, hey, love your property, still interested. If you're ever interested in selling, I'd love to have the conversation with you. Being consistent shows them that you're still in the market, you're a real player, and that you're going to be around for when they do decide. And just like any sales process, you don't usually get a commitment or really any traction until the 4th or 5th and even 6th time you follow up. So if you're pursuing off-market opportunities directly from owners, it's not a one and done thing. You have to just keep going and being consistent with it. Same thing with broker relationships. Be consistent, stay in touch, communicate, and let them know you're still in the market and you're still looking. The last thing you have to do is take action. If you spend all this time networking, building rapport, establishing relationships, telling people exactly what you're looking for, if you find that deal, you have to take action. That means having the conversations with the brokers, with the owners, and putting that letter of intent in or an LOI. Now, this can be intimidating for some folks, but again, putting that LOI in, an LOI is a non-binding agreement. And so, there's no real risk of putting out an LOI. And if something changes, you learn something new, you can always say, well, we learned something new. But that being said, you have to do what you say. If you put an LOI in and nothing really changes, you really should pursue it. If it's not a deal, then don't put the LOI in and explain to the owner or the broker why it's not a deal and why it doesn't work for you. If you're specific and can explain that, just at this price, our return threshold is X. So let's say you're shooting an 8% cash on cash return. And the way we've underwritten it, the way our model shows what the returns are going to be, it's only a 5% cash on cash. That just doesn't work for us. I understand that the seller needs to get their purchase price. I don't think we're the right buyer for this asset, although we love the property. So be specific, but if you make a commitment, do what you say. And once you get that LOI, that property under LOI, you really have to be careful. You don't want to start changing the deal or backing out or trying to renegotiate. For a lot of these properties, you may find some issues or some minor, deferred maintenance or whatever it may be. You really have to spend some time to determine how material that issue is. And if it's not significantly material, if it's not going to change the deal in a large way, it may be worth just pursuing that opportunity knowing that you can take care of it. Because if you do get a reputation for renegotiating or what is called retrading in the middle of a deal, you're going to get a reputation of, okay, they'll put an offer in, but they're going to try to renegotiate before we sell. Now, I'm not saying if you find something material in the deal, you don't bring that to the seller and the broker's attention. You absolutely have to. But what I'm saying is just don't sweat the small stuff. If, some carpet needs to be replaced, okay, you were going to have to replace carpets anyway. Don't get hung up over minor issues. And then you're not going to get a reputation of being a retrader. And then the conclusion is, close on the properties that you put under contract as long as you can check all of your boxes. This is the best thing to establish yourself as a qualified buyer, and this will accelerate your deal flow and your opportunities significantly. There's no really other way to replace getting access to deal flow than being a real known buyer in a given market. So I hope this has helped you kind of get your head wrapped around what the process is for pursuing multifamily acquisitions. Again, establish very specific criteria in your market in the deal itself. And then you build relationships. Build relationships with brokers, build relationships with property owners. You never know where a deal is going to come from, and just get the word out that you are a buyer and you're in the market. And third, take action. Put in those LOIs, do what you said you're going to do, and then close on the property and execute an awesome investment. Again, I hope this was valuable to you. If you like these videos, please subscribe to our channel, hit the like button, and if you'd like to sign up for our weekly multifamily report that we send out every Thursday morning at 8:30, go over to graycapitalllc.com, click the button to sign up for the report, and I guarantee you're going to enjoy the content. All right, my name is Spencer Gray, president of Gray Capital. Have a good one.